Morning all, how we doing? Happy Monday. Morning Profster, morning Bruno. It's Monday, another week ahead. Just give it a couple of minutes. I've taken a short on DAX this morning. Where's my pen gone? Again. Why am I always losing my pen? There he is. So short on DAX. Got the gap fill, which I'm playing this morning. Had a nice push up at the open. Nice rejection wicks. Bearish engulfing. First position on break of that candle. Second position as we broke the low of that initial open. And looking to play the gap fill. As usual. You never know. We might even get one that works. Been one of those weeks for gap fills last week. They were not very cooperative, were they? Morning, Tammy. Quick rundown of the news before the market opens. Not a massive amount of news over the weekend. Well, nothing over the weekend really. Just no red news over the weekend. More coronavirus in China, but it doesn't really affect us particularly. So nothing to worry about there. Quick overview of the week. Morning, Rahat. Nothing much today news-wise. We got employment for Spain at 8, which will be bad. Always is. Regardless of whether the news comes out better than expected, it's bad. Unemployment's crap in Spain. We got Bailey talking at 10 o'clock. That was red. They've changed it orange for some reason. Not quite sure why, but anyway. We got Bailey talking, so there could be volatility on the pound this morning. Outlook survey for Canadian dollar later on this afternoon. Again, doesn't really tend to do anything. So main news is the interest rates for Australian dollar on tomorrow morning, 5:30 a.m. Then we've got PMI for the US dollar, services PMI. We had manufacturing PMI last week on Friday, so services time turn this week, 3 o'clock tomorrow afternoon. And then on Wednesday, we have FOMC. So Wednesday evening, FOMC, 7 p.m, usually quite a biggie. It's really, really flip of a coin, FOMC. We have nothing, same as non-farm, we had nothing on non-farm, did we, last week? So it is very much hit and miss at the minute, but potential massive volatility off of that. So we need to see what obviously happens with that. So again, we could have a fairly quiet start to the week ahead of FOMC. They quite have to wait for FOMC. US dollar unemployment claims on Thursday. We don't tend to do an awful lot. And then we've got CAD unemployment on Friday. So it's a very light week news apart from FOMC, which is obviously potentially very large. So main things are the Australian dollar and FOMC this week. Proster. So we still taking gap trades. If you want to, it's up to you. I am. Gaps work, but not all the time. So up to you if you want to take them. I like the way you say, are we still taking them? Depends if you take them at the same time as me, then we are. You know they're there. If you fancy them, take them. But they're not, as I said, they haven't been particularly reliable, have they? Friday, case in point. There's the last candle on Thursday. We didn't get there. So, odds seem to be slightly lower at the moment, obviously, but this is probably to do with volatility with what's going on with the war. But, you know, there's a technical reason why they get filled. So usually they will, but they seem to be taking a little bit longer than normal. That's all at the minute. So, but anyway, I took that one this morning. Quick look at the indices from a daily perspective. We've had really nice down reversal off the highs last week. Slight pullback candle and obviously gap up, which is looking like it's getting filled today. Let's move TP on that. So yeah, difficult to read at the moment. The DAX is obviously a lot more sideways than the other indices at the moment, and we are up in the 2472 zone on the daily, which is where we would tend to see the bounces starting to happen. So we did get a lovely rejection off the 72, and we have broken back inside this initial candle that we got stuck in as a control candle. So we're back basically in the range again. I'm looking for a breakout of this range to get this gap fill done down here. So I'm still looking short bias, I think, at the moment on the DAX. Obviously intraday it can do what on earth it wants to. So, but short bias. So looking for down, pullback, break, that sort of thing. Yeah. So looking for this to be the peak formation high, and then start market structure shorts from here on the DAX. We've got 2 minutes to the open. I'm going to close that 0.7. Just because obviously we may well just get a big spike up on the open. We could get a big spike down, but whatever happens, we're going to get some volatility, which is probably going to either stop me out or hit my target, and I'd rather take 0.7 than risk losing it. So yeah, so all the other indices basically, NASDAQ, nice pullback, but this is potentially a pullback long. We are very, very long on the US indices. S&P has pulled back beautifully into potential support and is sitting there at the moment. We've pushed up, we gap filled down, pushed up in the Globex session, and the Dow has pulled back down below support. So it's a real mixed bag out there at the minute. Short DAX, undecided Dow, could well be going the same way as the DAX. US indices, S&P and NASDAQ longs. So very, very confusing picture out there with the indices at present. ADRs, nothing hit today so far. So we'll have a look at those in a minute. We'll go through all the FX pairs. Right, so let's see where we go at the open this morning. Prostat, I wanted to, but I said last week it didn't work. Yeah, it doesn't work. It's not so much the last week gaps haven't worked. I mean, they didn't work very well last week. We did get the fills on the gaps that we had, but they took more time than normal to fill. So, like everything, you know, gaps have a sort of 50 to 70% strike rate of hitting, of doing it in the day. So means last week we just had a week of 30%, and this is what I keep talking about, yeah. And this is where how these prop firms are operating. The best strategy in the world, if you've got a 70% strike rate on a strategy, at some point that 30% is going to kick in. Now, if that 30% decides to kick in with 20 trades in a row that don't do what you're expecting them to do, that's fine. It's still only part of that 30% of failure, isn't it? It just so happens you get loads of them happening in a string all at once. That blows your account in a prop firm, doesn't it? They know this, yeah? Just because you got a 70-30 strike, mate, doesn't mean you get a winner, a winner, a winner, a loser, a winner, a winner, a winner, a loser, a winner, a winner. It doesn't work that way. You have a loser, 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 winner, 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 winner. It just means 30% at some point over the entire space of a year, i.e., 300 odd trades we've got that we're going to have, which are gap fills every day. You have a week where they just don't work. But c'est la vie. That's trading, unfortunately. So we've got a fairly decent range at the moment. It's not too big, which is good. Not really anywhere directional out of the gates at the minute. What's the most indice that move with the DAX? All of them. They all will move in tandem. I watch them all. So on my other monitor, I've got this screen. Yeah. So this monitors all indices and oil. Watch the lot. They all move very, very similarly. The FTSE is a little bit of an anomaly, but the Dow, the DAX, the NAS, and the S&P will all move very, very similarly. But from a speed perspective, the DAX will obviously move faster during the European session, and the Dow is the closest to it because it's got 30 stocks in it. And there's fairly similar market breakdowns as well with these sectors. So Dow's typically the one I tend to watch. Morning, Stevie. Did I just say that? I can't remember. It's Monday morning. Watch the FTSE mainly in the morning with the DAX. Yeah, FTSE's. I find the FTSE moves out of sync because it's a different indice in the fact that it's got 3 times as many stocks and more sectors in it. So it tends to get affected quite differently to the DAX a lot of the time. You get quite a lot of divergence in the two. But sometimes they move very, very similarly. You know, doesn't seem to be a rule with it. But the FTSE moves, obviously, there's a lot of volatility. So if you want to trade indices at the Frankfurt Open and the London session, then the DAX and the FTSE are the ones that get the most volatility and the most volume. But they do move very differently. You can see, obviously, the difference in the two. Yeah, I mean, the DAX is pushing down, the FTSE is pushing up. So, you know, they are not correlated as much in times of volatility. Okay, so fairly slow open at the minute. Oh, terrible day Friday. Look at that. Awful. So I'm just looking at support and resistance areas that I've got on the chart at the moment. Sort of this area here. Which we seem to have just broken and validated now. So I'm going to take that one off the chart. Might just move that up to where we gapped up to this morning, which is here. And then from a low perspective, we've got that high there, which is kind of isolated, used twice. Did sort of reject there, pushed through and rejected there. Not particularly clean and respected, but we'll keep an eye on that level. And then obviously moving down more recently, we've got those 2 levels there to the downside to worry about. Okay, so gap fill's done. We've got an opening range break to the low. Morning, Chris. Haven't been here in a while. Had a big loss last week, but back on track now. Let's make it a good month. We can but try. Okay, so all the indices seem to be coming down fairly hard at the open. So I want to see basically how we react off the back of this candle, whether or not we are just going to sort of retest this area from Friday and then look to push up. But hopefully we'll get the opening range breakout here. It's a bit of a big one, but and then I'll be looking for pullbacks to take short positions today. As I said, looking for that gap fill. You can't see it on the 5-minute chart, but the gap fill down below this level. So this is the low from last week. And obviously we've got this gap further down from previous week, which I'm aiming to try and get to for this week. Today would be very nice, but it's going to be way beyond ADR, so very unlikely. You never know. News-wise, obviously, need to keep an eye out for anything that happens with Ukraine, as usual. Lots of talk on the news this morning about war crimes. Obviously, Russia is pulling out of Ukraine, and it looks like they're executing civilians on the way out, and booby-trapping bodies and all the nasty stuff. So the world is watching very, very closely at the moment. So, if that does continue, could well be repercussions, but we'll see. Chris shot me back down to earth and made me realise not to look at the monthly target, but only the daily targets, and stick to my stop loss to avoid over trading. Had to make a big mind shift. Yeah. There's a phase you go through when you're doing well called walking on water, which is in the PDF that's on the website, and we tend to get over kind of excited when we're doing well, and overconfident, and you'll have runs like I keep saying about these these streaks. You're going to get streaks where I had a day last week, didn't I? I did over 10%. And every single trade, 100% strike rate for the day. Every trade, like clockwork, pull back, drop, perfect. Every single trade just did exactly what I wanted it to do. And those are the dangerous days, because you go, I've cracked it. And then the next day you go, right, okay, now it's time to up this lot size. And that's the day you have an absolute washout. So you've got to be careful and just stick to the process, like you just said. Concentrate on the process, concentrate on keeping your stops, your strategy, whatever it may be. Just keep doing the same thing over and over again. Repetition. Build up muscle memory doing the same stuff over and over again. The images coming out of Boocamp are horrific, yeah. I know. I haven't really looked at them, to be honest. I only saw what was on the news this morning, and they blurred out a lot of it, so I kind of guessed it was pretty bad. Euro US dollar coming down very, very hard this morning. Looks like we've got some decent US dollar strength. We've got some euro weakness showing across the board as well. We'll have a look at the FX pairs in a minute. Okay, so big close on the DAX and all indices, actually. Big closes to the downside. So we're tapping into an area down here, potentially as a bottom. And we've obviously got this big move that started on Friday. So this is the sort of end of day pump on Friday. So we may see some buyers starting to kick in down here. But I'd be looking for them to push back up into this area and then drop today. So looks good for shorts, but I'm not going to chase it down here. I need to wait for a pullback. So we'll keep an eye on this. I'm obviously monitoring this on my other monitor. So I'm not going to chase jumping short because of this. There's a possibility we could just go out the gates today and collapse. And if we do, we do. I'm not going to try and jump on board this train. I'm going to wait for it to stop and then try and jump on. So just look at levels where we're potentially going to stop. Obviously, we've got double bottom here. We've got Thursday's gap fill, which it looks like we are reaching for at the moment. So when we get down to this area here, I'll be looking for pullbacks. May well take some longs down there and play the fade, and then look to jump in short. So let's have a look at the FX pairs while we're waiting for that to decide where it's going this morning. It's a big old move, that. Right. So ADRs, nothing obviously today. Obviously everything's reset. So everything's reset. Monthlies, weeklies, dailies, obviously completely flat. It's Monday. It's the start of the month, and it's the start of the week. So we'll see what happens here. There's nothing really getting close to ADRs today. We haven't had massive sessions during Asia anywhere. So kind of just waiting for them to move the market basically this morning. Hard to jump on a runaway train, yeah. You can chase it. I mean, I've got on these before, and they don't stop. We'll have an hour, 4 hour. You just get one of those big 4 hour candles. Yeah, this could be the start of one of those. But 9 times out of 10, when you jump on down here, what happens? It pulls back. If I hadn't have closed out that 0.7 this morning, I still would have been out down here at my target. So just, don't look at it. Didn't trade it. Wait for a pullback opportunity. So there's no ADRs. As I say, completely flat. RSIs on the hourly, we are also completely flat. And the 4-hour, we are also completely flat. So there is nothing to look at from an RSI extension perspective or from an ADR perspective at all today. So what I'm going to do is just whiz through all the FX pairs and do a little analysis on everything, see where everything is, look at levels, and look at where we're potentially heading with all of these. COT report as well. Let me just quickly go through the COT report. Not that I'm paying any attention to the COT report at the moment, but we might as well go through it anyway when it's loaded. So there's your directional biases. Changes this week. US dollar still the same. Market is short. Now this I don't think necessarily means the market is really short the US dollar. It just, to me, when we're going short like this and the US dollar's kind of doing that or kind of doing that, it just means there's not a lot of buying interest in the US dollar. So at the moment, bias is short for US dollar to be dropping. And the US dollar seems to be having very big, strong moves and then complete relaxations and big, strong moves and relaxations, which is what's causing this range at the moment on the US dollar. It's acting very much like the Swiss franc normally does. The Canadian dollar is a short, but obviously this is going to be vastly affected by oil, and we've seen a fairly strong Canadian dollar over the last few weeks. So again, this isn't making particular sense. Big jump on the pound. And if we look at the pound and what the pound's been up to over the last few weeks, yeah, it's not good, is it? Pound is not happy, apart from against the yen. Obviously, it's the only thing it can beat. So the pound isn't particularly strong at the moment, yet there's a lot of money coming futures-wise for the pound. Euro, still virtually nothing. We're kind of negative to neutral on the euro, which we've been for a good year or so now. So nothing's happening on the euro. Swiss franc we kind of tend to ignore anyway, because the Swiss franc moves in fits and starts regardless. So it doesn't really have a direction. It has injections of cash, and then that cash is pulled back out again through the Swiss banking system. So we don't pay much attention to that. Yen, interestingly, the market got loads of news from the yen over the last couple of weeks, with the Bank of Japan putting into place lots of monetary policy decisions to drag itself out of the COVID issue, drag itself out of its debt crisis, all the bond purchasing that's been going on. So everything that came out of the Bank of Japan for the last couple of weeks has been positive, and they've released plans to get themselves out and dig themselves out of this situation. Yet the market reaction has been negative. And we saw, obviously, last week, the yen start to power up across the board. So we had this big, strong pullback on the yen. We had 3 days solid where the yen was like, right, this is it, we're going. And we were expecting, well, I was expecting that to be the pullback or profit take move on that push. And it didn't happen. Again, like I said last week, we keep getting into these accumulations on the yen. Every time, let's go 4 hour and can see it. That's not a good example. Every time we pull back into an area where we've had a push and a pause, we get stuck. Yeah, and it's the same across all of these yen pairs. Every time you're getting to an area of accumulation, you get stuck. And we're still in that situation. And the fact that the market has now decided, actually, yeah, we don't like it. It seems that the market's just reacted negatively to that positive news that's come out of the yen. So the yen is still a short, which means still longs. And if you look at obviously what's happened with the yen, it's very difficult to take a long on the yen off the back of this, because there is so much downside available. But we get periods where currencies just pause before they start their next leg up. So what we're probably waiting for here is a 24 to catch up. So sideways with a long bias, I think yen's at the moment, based on what the COT report has said. But again, that's if you want to trade long term. If you want to trade the longer term time frames, you need to stick in line with whatever the current trend is. Current trend, obviously, against all yen pairs is to long against the yen. Very, very weak. So I'm personally not looking for any long-term positions at the moment. So I don't really mind too much which way I get in, but I think I would have to say probably more long bias than short on the yens at the moment, based on what's happened here as well. New Zealand dollar, we had that massive flip on the New Zealand dollar. I remember I said about this a couple of weeks ago. It was like, this isn't just gone long, the market has really gone for it. Just as they did that, it paused and stalled. So we flipped back the opposite direction. Now, if this is anything to go by at the moment, you want to be doing the opposite of what the COT report says, because this at the moment is kind of, I think what's happening with the COT report, where we normally have a long-term bias over a 4 to 12 week period, where this will win out eventually and we'll be on the right side of those positions. What I think's happening at the minute is the market is going into a wide range on a lot of currencies. Because there is uncertainty, there is massive uncertainty in the stock market, there's massive uncertainty in the world with what's going on in Ukraine, with supplies of energy, trade partners, sanctions. Everything's changing from a financial perspective and from a world power perspective at the minute. So I think the market's going into a wide range, and what this is going to mean is every time we're seeing these changes coming out, obviously we are about a week and a half behind what the market is doing with the COT report. It's a long-term bias. And as these things are changing, we're getting this information as we're getting to the opposites. So I think what we're finding is the COT report is probably going to become more of a opposite sentiment. Yeah, we had this flipping short. The New Zealand dollar went mental. Everybody's flipped long on it. Last week, the New Zealand dollar weakened with the Aussie dollar. It didn't really go like that, did it? It kind of went more like that. But now it's gone back again. There's a chance we might find some more money coming in on the Aussies because the yen has started to weaken again. And we've seen all this money that normally flies into the yen flying into the Australasian pairs, haven't we? So very, very difficult to read at the moment, the COT report. As I said, more inclined really to forget that for the moment. But it's just interesting. There's been some fairly big shifts in where money is positioned on these at the minute. So, and obviously with sanctions, money's having to go to different places. So, so had a quick look at that. Obviously, it's not something I'm really paying massive attention to at the moment. But I wanted to cover it. Obviously, if you are long-term trading, very, very useful, the COT report from a long-term directional bias. But as I say, at the minute, if you look at a lot of things long-term, DAX is a prime example. There is a lot of stuff. There is just, we're not quite sure at the minute. And I think a lot of the FX pairs are probably going to go into this. But you look at these on an intraday basis, there's tons and tons of opportunities, hourly and below, to get into plenty of trades. So still pushing down on the DAX at the minute. Toying with the idea of taking a 1 bar pullback. So there goes your support, double bottom. I'm going to put a sell stop under the low there. Actually, I'm not going to do it with such a tight stop. Okay, again, sell stop under the lows. And watch this for a pullback now, basically. See if we can get a 2 bar, maybe a couple of legs of a pullback and get into a new leg short. Diamond, I know exactly when it will pull back the moment I jump in. Exactly. It's exactly when it always pulls back. So wait for the pullback. We got anywhere in here anywhere in here, really. So the best play on this type of aggressive move, obviously there's two things at play here. They could be reaching and then shooting off. More likely on a move of that strength, they're going to pull back and continue it today. So basically, pendings under the lows. Yeah, what we should see on a decent strong pullback is kind of what we saw here. Yeah, you're making new lows, new high, new lower highs, lower lows, equal high, low, lower high, lower low, equal high, lower low, lower high, inside bar, lower high, lower low, equal high, lower low, open. Yeah, so what we should be seeing now is a low, higher low, either an inside bar or a higher high, higher low. We're just looking for higher lows basically, or equal lows. When we break one of those, that is potentially when the sellers are stepping back in for leg 2. So just trail. Every time we get a low, which is higher than the previous one, you can trail it. And at some point, we're going to get one of these, potentially, and that's it. You're in, and then the next leg starts to the downside. So we're basically just trailing with the market, waiting for those sellers to suddenly go, right, now. And that's when they're going to dump that large contract in, and that's going to start the next leg moving. So, right, so let's run through all the FX pairs while we're waiting for that to happen, hopefully. Right, Aussies. I'll let you know what happens. I'm just obviously watching it on the other screen. So the Aussie dollar long at the moment. Have been long for quite a few weeks since the middle of February. Actually, before that, sort of end of January, we started to push. When the war kicked in, we got that big extra kick to the upside. We came back down and undid it, and now we've pushed up again. So long opportunities on the Aussie dollar CAD. Waiting for pullbacks, really. Now, if we're in a trend, what you tend to find in a trend is with the RSI, you're looking anywhere sort of below the sort of 60 level for a trend pullback. Yeah, so we get a little pullback and then a push. So we're looking for a push, pullback and push. 50 is safer, 40 is much, much safer because it's a much deeper pullback. So again, the further they're pulling that elastic band back, the quicker the spring's going to be. I don't think we're going to get too many big extensions like this. This was an undoing of the initial war that started sort of end of February. So with anything that you're looking for a trend continuation on, we're looking for pullbacks into the 20, 72 area, and then for long opportunities out of there. But equally, if in a very strong trend, you're not going to get back to it necessarily. So looking for long opportunities on this. The Canadian dollar obviously is something that could well strengthen based off the back of the oil situation. That can change on a dime at the minute, but there is a lot more supply out there from other countries like the US. So there's potential for the Canadian dollar not to make too much movement, but equally we need to be keeping an eye on sort of what's going on with oil and the situation there, because that's the main sort of driver for them. So at present, I would probably say Aussie dollar, and based on what's happened with the New Zealand dollar on the COT report, I would say probably Aussie dollar we should be looking for long opportunities on. But as you can see, we haven't really done an awful lot now for a couple of weeks. We're kind of sitting in a bit of a long-term flag at the moment. So long opportunities, Aussie New Zealand, again, keeping in line with the trend. Aussie dollar Swiss, again, Swiss franc has completely lost its strength. We did see some strengthening up on the Swissy. We just broken new lows on the DAX. In short, one. We did see some strength coming through on the Swissy. We had a couple of days last week where the Swiss franc powered up, but not dramatically. We kind of just about got an ADR out of it. So again, looking for pullbacks, support resistance, and looking for those reversal alerts to get into opportunities. So pullbacks into previous support. Look for liquidity runs, and then reversal alerts, and sort of scalp out of them in a trend direction. So at the moment, I think trend direction is key. We want to be looking at where it's going. Market structure, just broken these highs. So we've got low, high, higher low, higher high, higher low, higher high, higher low, depending on how tight you want to go, but definitely higher high. Now we're looking for a higher low. So last one was down there. We've got a support area here. So if it pulls back anywhere in the 24.72 area, again, longs out of there. Could well go from where it is now. So whatever time frame you're trading, you want to be looking for areas of accumulation, areas of support, resistance, which are obvious. And if you get to those, monitor for reversal alerts on a smaller time frame, and then look for jump-ins long. So Aussie dollar Swiss, yeah, definitely still a long. Aussie dollar yen, again, with all of these, we've had a reversal alert on the 4 hour, which is retesting at the moment. So, this thing could come down. But for what I'm seeing on the COT report, and what I'm seeing across the board with these yens at the moment, there is no strength really showing through. So it's hard to take a long on the yen up here for any long-term trades, because there is such a big drop still to be had, and it's very rare we don't get it. When you get these big, strong movements, we always get some kind of profit take, pullback, or reversal. So big, strong push up, reverse the whole lot. As this pushed down, we had a 50% 61.8 retracement on that move, and then it continued to grind down. The speed and the strength of this move, it's very, very difficult not to say there's a profit take move coming. But at the moment, it doesn't seem to be able to do it. Every time it tries, it fails. But we have got, obviously, a reversal alert on the 4 hour now. So it started last week, but you would expect it to start and then continue quickly, and we haven't seen that happening across any of these yens. So very, very, very difficult to trade in any direction. So again, short term, look for, if you want to trade these, look for small time frames, look to get in and look to get out fairly quickly. Just pulling back on that move at the minute on the DAX. It's rejected down here. I wasn't expecting it to actually go that quickly. I was expecting to get more of a pullback on that before jumping in short. So I'm just watching this. I don't want to take too much loss on this. Don't basically, if this is going to flag and then disappear, fine. If it's going to pull back, there is such a lot of pullback potential on this. This could go anywhere really on the way back. I was expecting to get more of that sort of pattern and drag that stop underneath, but that was kind of meant to be an entry, which I would get gathered into after we'd pulled back and I got into another entry. So I'm getting out. That's too quick. And this is going to be really, really strong, but we'll see what happens with that. So yeah, Aussie dollar yen, very confusing outlook on this at the moment. Difficult to call. It's very, very difficult from when you've been trading profit take moves for such a long time and mean reversion to see a move like that and not want to short it. But with the current climate that we're in at the moment, it just doesn't seem to have any strength, does it? So I think probably the best bet is to wait for long opportunities on it on lower time frames. But equally, if you view this as a M pattern reversal, go short. Whichever you feel is the best at the minute with these yens, because it's very difficult to call. Aussie New Zealand. Definitely a long at the moment. Aussie has been stronger than New Zealand, but New Zealand obviously has been strong as well. When we get to a point where they're both very strong together, we get an accumulation. The Aussie has won out. So again, lovely pullback into the 24. We had a pullback into the 72, back into this accumulation, and it bounced. So looking for long opportunities on that one. But again, this could be very, very choppy. Aussie, New Zealand, these guys tend to move in tandem together. We've obviously got news coming in this week on the interest rates. So yeah, big news on this one on Tuesday, tomorrow morning, isn't it? Aussie dollar. So it could well potentially fly off to the upside tomorrow. News: the rate is expected to stay as it was. Typically, in that situation, what we would do is we would look at the COT report and say, right, what's the market positioning on it? The market position is short, therefore we would look to short it on the news coming out as expected. At the moment, however, I think you just got to go in line with what the current trend says. So, longs on the Aussie New Zealand, Aussie US tapping into this high at the moment. Lots of rejection up there, can't quite get through, so we're just basically in a trading range on the daily. So until that breaks out of that range, low time frames, looking for shorts at the highs, longs at the lows. It's moving very, very quickly in this range. Yeah. So you don't really get an awful lot of opportunity to get in and out of this thing. It's up to the highs and then it's floored and then it's shooting up again. So range bound at the moment, waiting for the moving average to catch up. When that gets up to there, I would expect potentially moves to the upside, based obviously on the US dollar being massively weak as far as the COT is concerned as well. So, but again, trend. Looking to trade in line with the current trend. Got to assume that while this war is on, the market knows what it's doing and it's just going to continue doing what it's doing as it has been for the last sort of 3 or 4 weeks. Canadian dollar, again, in an accumulation. Like I said, with the COT report, there's an awful lot of this at the minute. Awful lot of range bound. Market doesn't really have a directional bias. So again, when we're getting up to highs and lows, supports and resistances, looking for levels where potentially we could take longs from. So lower time frames, using these higher time frames to identify really good support resistance levels. When price gets down there on the lower time frames, looking for reversal alerts and then jumping in on those. So again, just constantly adjust support resistance. Look for levels where we're potentially going to get bounces, and then where are we going? We continuously stop there, monitor it closely. If we crack through that level, going up to there, look for shorts back up there. ADRs, when we get to ADR, if we get into an ADR level and that ADR level coincides with a resistance level, short it. Likelihood is we're going to get pullback off of it because the market's not really got any big, strong moves. Proster, I got the long in the DAX. Good. It's going nicely. It's pushing up to the 20. So I'm going to trail. Trail basically sell stops all the way up. Try and get a short on that. CAD again, another yen. All these yens, pretty much the same thing. Make your own mind up on these, whether you want to be going long or you want to be short. You are either expecting this move to continue that we started last week, in which case you're looking for a pullback and a drop, or you're going to stay in line with the trend and assume that, the yen is massively weak. They're not going to do anything about it, and we're going to get a pullback in the long. I really don't know at the moment. So wait for market structure on lower time frames to give you some indications. Yeah, get in, keep tight, and you're either going to get that runaway or you're not going to get that runaway. At the moment, you've got to rely on basically market structure that you can see on lower time frames, and stay in line as much as you can with it until it tells you it's doing the opposite. Yen's really no idea on what's going to go on with these yens. Again, big strong push for days on end. Signs of strength. Signs of strength on the yen. Starts to come back down, but then look at all these wicks. Yeah, just no strength whatsoever. Euros still short. All euros. Hit the short button on the euro whenever it pulls back. Basically, got a lovely 50 on this one. You see, I had this one drawn in from last week. Count the 50. Anywhere up here, short opportunities. So yeah, nothing really. There's no reason why the euro should be along at the moment. So it's business as usual. Pullbacks to the 20s, 24.72 area. Any reversal alerts you see on lower time frames, potentially you're going to get these big ones that I've got here. Yeah, just ride it short. The euro's not doing well, and is continuing to not do well. So Euro Swiss again, breaks to the lows. Well, breakouts to the downside on these are holding. Yeah, so breakout shorts and pullbacks, market reversal alerts to the downside. All euros. Euro pound is one of the slight anomalies at the minute because the pound is so weak. Again, that's obviously changed on the COT report. Yeah, massive strength on the pound this week. The market's been long on it for a couple of months, but obviously that is nothing to do with the war. So this one's gone sideways. The euro has been the whipping boy of the market for such a long time. Whatever the other currency's doing, the euro is reacting to it. So if you get strength in the US dollar, the euro US dollar comes down. If you get weakness in the US dollar, the euro US dollar is basically going up. It's basically the same with all other currencies. At the moment, we've got the pound being weak and the euro being weak together. So what we're seeing is total drop. Because it's whichever one of these is slightly stronger than the other, obviously, which is what happens in Forex. It moves the other way, but they're both weak at the moment. So we're seeing fits and spurts coming in to them, which is obviously causing a massive, whippy, horrible range. Overall, I would be looking short. The pound is more likely to recover faster than the euro is, mainly due to the fact that we've obviously got the banking sector in the UK, and the services sector is always outperforming manufacturing at the moment. So we will see more strength potentially coming through on the pound. But when that will happen is obviously very difficult to gauge at the moment. So we've pulled back up at the moment into this area of really nice, strong support, and we've rejected that. We've broken back down below the most recent lows quite convincingly, and it's starting to drop off a cliff again today. So again, shorts on this. So any kind of pullbacks you see on euro pound, again, be looking to take shorts. Breakouts to the downside, not after it's kind of done that, but pullback up into there, shorts. Yeah, so looking for shorts basically, euro pound as well. Euro yen, again, this would be the one. This is kind of a good barometer as to what's happening with the yen. If the weakest currency in the market at the moment, apart from the yen, which is the euro, can beat the yen, it shows you how weak the yen is. Yeah. So this thing is the one that I would expect when the yen powers up to be absolutely destroyed. What happened when the yen powered up last week? Not a lot. So it just, there is no strength in this yen at all at the moment. But you've got to be, with the euro, you've got to be short bias. With the yen, if you're biased on that being weak as well, it's a case of which these is going to win out. So I would be looking for shorts still on this one in case we get that strength coming through on the euro. But be prepared if you're going to get into this to potentially get stopped out as it sits and chops. So not a great pair to trade at the moment, I don't think. Euro New Zealand shorts. We've had good strength on the New Zealand dollar, and would expect that to potentially continue along with the Australian dollar. So again, as you can see, we're short. So looking for short opportunities on that. We had a lovely short last week there, but hasn't gone anywhere yet. So continuation shorts, need to break that level. Looking to target down there somewhere. So Euro New Zealand shorts and Euro US dollar shorts as well. So US dollar, this is obviously the inverse of the Dixie, Euro US dollar. We're in an upward channel at the moment because we've got a weak US. We are still overall short. So this is kind of a flag at the moment in a long-term short, obviously, on the euro. So we've pulled back down. Big, strong drop off the back of the war. We're gradually regaining some of that ground, but we've pulled back straight up into resistance now again and rejected. So at the moment, this is a real mixed signal. We've got market structure, short term, long. Yeah, so we've got market structure putting in new higher highs, new higher lows, which is bullish. Overall, obviously, we are in a massive downtrend. So if you look at this as a potential pullback, that is exactly where we would expect that mediocre sort of pullback to start kicking in. Yeah, 72, 24, 50, 61, 8 retracement, looking for shorts. So looking for this level to get broken this week. And then obviously a continuation to the downside. But that's going to rely on obviously what happens with the US dollar. We've got no news this week really much. We've got services PMI tomorrow for the US dollar, and obviously FOMC on Wednesday, which is when we should see the big moves. So I wouldn't expect necessarily this week until sort of Wednesday to get any massive moves, but we will see. But overall short bias on that one as well. Pound odd off the charts down here. Every time we get some strength starting to show on this thing, it kicks again to another new low. We did get the reversal alert. We had basically last week we had this big strong push, and it was like, yeah, this looks like it's going. Then they came down, took that liquidity out, broke back up again, and now we've sat in this range. No move. We've just not gone anywhere. So again, pound is weak. Australian dollar seems to be doing pretty well, along with the New Zealand. So one sec. I'm just trying to shorten the DAX here. Under these lows. Just starting to roll over potentially. Obviously, this is still pushing high. We're still making new highs, but we're showing signs of weakness. So looking for a break. Eventually down. So I'm just putting some pendings in to go short. So yeah, pound odd. This thing just doesn't seem to be doing anything. When we do get this breakout on this one, we're going to run into this accumulation at support and resistance, which potentially is going to be the sticking point. So we need some strength on the pound, basically. No news on the pound this week, so nothing to kickstart it from a fundamental perspective. We've got CPI next week on the pound, but that's it. So yeah, nothing particularly fundamental that's going to change the directional bias on this one this week. So apart from obviously the Aussie dollar, which could well strengthen up the Aussie dollar, which means this is coming down further. So very hard to take any trades in either direction down here. We're just sitting in an accumulation. So at the moment, you've got to be more biased to go shorts on it. But I'd be more inclined to go short when we get up there, not just here, because there's no reason to take a long or a short now. It's 50-50. It's sitting in the middle of a range. So, not really tradable as yet. Pound CAD, same sort of thing, stuck in an accumulation at the lows. A lot of these, we're just stuck in an accumulation at the minute. Now, the pound Swiss, obviously this is a very nice potential long opportunity down here. Ordinarily, I would be saying this is a really lovely long opportunity, playing it sort of back up into the 24 for a short, because we would anticipate some kind of strength starting to show in the Swiss franc. We get those big injections for a day or so with the Swissy, where it moves very fast and hard in one direction or the other. At the moment, we're not getting that showing through on the Swissy, are we? So with the pound potentially looking like it's going to continue its downward trend at the moment. If we get a reversal alert on this one, I'll be inclined to play it a little bit long, but then looking for short opportunities. So again, really on this one, much rather wait for it to get up to here somewhere and then start to look for short opportunities. Hopefully by the time we've got some strength, you'll see on the hourly RSIs maybe we get some hits to the upside on the pound Swiss, and then we can look for short opportunities on it. But right now, technically, it's a lovely double bottom bounce, but where's it going to go? Yeah, I mean, potentially you could come back up to those highs, but there are points on the way where we are going to get stuck. So support, broke, support, broke, turned into resistance, pushed down. So we're getting, every time we're getting somewhere, we're getting points where we can get really strong reactions. So very, very difficult to trade. But overall, I'd be much more inclined to take shorts at these levels than I would to take a long down here, based on the way this thing's going at the moment. And if we break down below these lows, you know, not really anywhere else to go, is there? Yeah, we've got massive, horrible accumulation. At any point in here, we just get chopped around. It's just not a very nice pair at the minute. Looks lovely for longs right now, but you've got to say at the moment, you'd want to be shorting the pound. Pound yen, same as all the others. No idea. Lovely support. Bounce there. We got the reversal. We're literally just sitting in an area of balance at the moment. We popped up, looked like we were suddenly going to start reversing. We pulled back down into support and bounced off. So could go either way. No idea. Pound New Zealand, shorts, same as the pound odd. You got to say it's looking more short than long at the minute. Could well get something that shifts in the war. The thing that's going for the pound at the moment, obviously, is the same that is going for the euro and the indices. Every time we get an inkling of hope of peace talks or anything going well with the Russia-Ukraine situation, we get a spike in the indices. We also get a spike in the euro, and we get a spike in the pound. So if the war in Ukraine starts to resolve itself, we should see the pound starting to strengthen. And again, this will be partly due to the financial services sector will start to flourish a little bit more, and more certainty in the markets, and more risk taking in the markets means more financial transactions, more buying in the stock market, you know, just more movement, and more movement means that we benefit, because 70% of the transactions in the foreign exchange market go through London. So we make money out of the financial services sector. It's been suffering. We're suffering. So it really is all hinging on what's going on in Ukraine at the moment and the uncertainty over there. But at the minute, it's not changing. So therefore, no reason why we shouldn't just see this gradual decline continue as money starts to flow into the Australasian pairs. And that doesn't seem to be stopping at the minute. Pound US dollar, again, rangy. Just occasionally you get the odd move, which is typically off the back of news, and then we come back into ranges. So looking at levels on higher time frames like 4 hourly and the hourly, looking for these levels, looking at 5 minute and M15 for reversal alerts, jumping in and scalping some money out of it. That's all you can really do on this one at the minute. This is the same as the euro US dollar. Pound and the euro very similar. US dollar is weak. We've got a weak pound. We've got a weak euro. Therefore, we've got a range. So until one of these currencies bucks their ideas up, we are going to be seeing lots of range bound activity. New Zealand dollar CAD, again, similar sort of thing. New Zealand and the CAD are battling out over a massive range, looking for opportunities at lows to go long. But again, look at all this whipsawing. Yeah, we get the odd move up into a resistance and then off again. So again, see what happens at these highs. See what happens at those highs. See what happens at those highs. Look for bounces. Much more inclined to look for long opportunities. We've had a reversal alert and a retest. So at the moment, it's ever so slightly long, but it's not really, is it? It's just range bound. So again, in a range, we're looking for price to move up to new levels, higher or lower, where we've had reactions in the past, and we're looking for reactions on lower time frames. So just monitor everything until it gets to levels which look like there's a potential bounce. Get in, decent size stop, get out fairly quick. So sideways on that one. New Zealand Swiss, again sideways, more bullish than bearish. We've got lovely support here. Remember I drew this on last week. This high here, this low here. So this little channel, is where we were looking for reactions, which is just above the 24, obviously. So all held very, very nicely in there. So we've got the reverse alert, we've got the retest, although we haven't made a new high. Yeah, it's come straight off of yesterday's high this morning. Yeah, that's what I mean. Look, this is what we need to be doing at the minute, is looking for these levels and just finding opportunities on small time frames to get in and get out with whatever you can. So get in, run, take what you can short term, because it literally changes too fast on a higher time frame to give you any indication of which way it's going long term. Yeah, news happens, does that. News happens, does that. Then we don't like it for a bit. You know, it's trying to. The market in general in Forex is trying to respect technical analysis as much as it has done in the past, but we've got something in there like the Trump effect, where you're just getting it doing this too much. So everything is very jaggedy. Every trend you see is very weak, or it's far too strong to be able to get on it. Yeah, it's just everything's running away really, really quick, or it's just not going anywhere. So it's just a case of finding those supports and those resistances, and it's just jumping in on those. So at the moment, New Zealand dollar Swiss long. We have to assume at the moment the Swiss franc is going to continue to what it's done over the last 4 weeks, which is very little, in line with the euro, obviously it's all Europe. Longs on this one. And this is where the long was last week. We haven't broken those highs yet, so lovely trade opportunity on this one. Look for any kind of long opportunity, reverse alert to the upside, and break of these highs. Yeah, so we've respected yesterday's high today. We've come off of it nicely. If we pull back down into this area here and get a reversal alert long, and then break above those highs, off we go to the upside. But don't expect to go too far. We're here. Maybe 150 ADR. Yeah, half an ADR is enough. If you can get half an ADR at the market at the moment, it's good, because the likelihood is you're going to get some kind of resistance. It's not enough strength in anything at the minute. New Zealand or the yen, same as all the others. No idea. Either the yen is going to power up or the yen is not going to power up. At the moment, be more inclined to say it's not going to power up and look for long opportunities. New Zealand US, again, same as all the other USs. We're getting strength coming in on the US, and then we're getting it do absolutely nothing. Everything's turned into the euro. It's horrible. It's literally a bit of strength, no, not sure. A bit of weakness. Bit of strength, bit of weakness. Bit of strength, we might make a new high. If we make a new high, probably not going to make much of it. So, all these channels, look how weak this is. Yeah, if anything is moving, it's moving with such weakness when it is. So you're going to make a new high at sort of 175 ADR. Not that you're likely to get there today, but when you make that new high up there, you're probably going to have to pull back a couple of ADR before you find any potential movements back to the upside again. Just ever so weak. US dollar CAD at the moment. Canadian dollar is beating, oil is beating everything. Canadian dollar beating the US dollar down. Started to weaken out. Stopped. We had a lovely reversal. I mean, this is obviously that was the news last week. The usual whipsaws. Not gone anywhere. So where do you long it from? Where do you short it from? You just got to try and pick a high. By the time you get into something, you want to be looking to get out of it, because you're probably coming down to a level where it's likely just going to do that again. So overall, short. US dollar is weak, so potentially look at that to continue. US dollar Swiss, again, nothing on this one. We are, you can see for the moving averages, sideways. We've just come out of an area of sideways. We had a little spurt on the US dollar. And again, that's just really untidily undone itself, and now we're back down to moving average being sideways. Your guess is as good as mine on that. Look for levels, but I mean, it's very difficult. Pick a level. There's so many levels. Normally, support and resistance is really simple. there's too many. There's 4 support areas potentially here that I'm looking at on this. Got one there, you got one there, you got one there, you got one there. Where's it going to stop? Probably that one is the one that I would say is your strongest. So if we push up to that today, short it. That's a 50% retracement on this last move down. That's literally all you can look at on this sort of stuff at the minute. And then getting short, take half an ADR out of it, get out, reset, look for the next one. US dollar yen. Again, yen is in control. If it goes, it goes, and that will push down very, very, very hard. If not, the US dollar's not going anywhere. So somewhere in this newly formed wide range, we will just play around in potentially until there's some strength in the yen or the US dollar, which at the moment, neither. Gold. Still looking for long opportunities in gold. So we had this support hold. We didn't get the movement. Looking for it to come and try and break new highs at some point. But again, with gold, we're just getting this movement. I've seen so much in the funded Discord channels at the moment. There are a lot of gold traders. A lot of FX traders have moved over to gold when the markets all started getting a bit weird with the war, because they saw that everybody has been trying to buy gold and it hasn't managed to get anywhere. It's just not managing to get anywhere at all. It's flagging out, which is exactly what it was doing if you look back prior to the war. We had an ever so slight up channel, and then obviously it all kicked off. We had this big move up prior war, and then obviously we had that big old spike. Everybody's trying to play the next leg up, but all this thing is doing at the minute is just tempting people into longs, and then going nowhere. So I still think this is going to break to the upside. We're going to get a new high on this. I don't think that's going to play a part. It's too old. That's all been done basically. So if we could get this high done, so that high there, if we get a break of this high, this is a really, really, really strong resistance. When we break that resistance, that is going to turn into support. Yeah, that's tapped 4 times, 5 times if you count that rebound. If we break that level, we're going to tap that and go. But we've got to crack this level, and then we're off. Yeah, but at the moment, yeah, since the war started, and then we had that big correction, the same as we did on oil, the thing hasn't had any directional bias whatsoever. So sideways, looking for longs. But again, you're not getting anywhere, are you? This is why short time frames are king at the moment. You just need to be looking for long opportunities on the short time frames when you can spot them, and take whatever you can out of them. But you're going to get, this is why I don't trade gold, because gold does stuff like that. You get these huge moves, and this is why it's so good to trade and why people love to trade it. Because if you get on the right side of it when it decides to go, you make a fortune. So you use a stop on it, but don't use a TP, because when the thing wants to go, it will just go, and it's a massive trend monster. But you can't time anything at the minute. So it is luck of the draw, but I've been much more inclined to take longs and shorts. Just based on what's happening at the minute. This area here, this nice balance area where we had the initial push out of, that's being very, very nicely supportive. So the market definitely wants to go higher, just can't find any legs at the minute. DAX is just flagging at the minute. One short at the moment. There. Oh, about to get in 2 short. But yeah, not doing a lot at the minute. Indecision. Waiting for this next leg to start. But yeah. Half an hour sideways. We're seeing this all the time, aren't we? How many times have we been in the live room over the last couple of weeks where we've been sitting here for half an hour and I've been filling because there's nothing happening. We get these. It's like the market goes, right, we need to make our money. Now where we're going, I don't know. It's just very, very, very unpredictable. And you get the Zelensky or the Putin effect, they come out and say something and bang, we get that movement. And then we're sitting there waiting for hours for something to happen, and it doesn't. So too short now. Looking for new lows. So that's gold. We've covered the indices. All the indices basically are on different time zones really at the moment. So we've got the DAX obviously being Germany and Europe, which at the moment is struggling to make any new progress because there's too many things affecting it from a war perspective. We're in a bear market, and this looks like the recovery, pullback in a bear market before next leg down. We've got the US markets in the bear market, and we seem to have completely forgotten we're in a bear market now and made new highs. We didn't crack this level here, but this is potentially just a pullback for next leg up. So this could just be the correction in a bull market, and we're now back in a bull market. So at the moment, who knows? This is a real critical spot. If you look at the accumulation before we dropped, so this is the Christmas sort of period here where we pushed up, and then all the way for the last quarter last year we sat up here. We got our little Santa rally, which we always typically get, and the Santa rally pushed up into resistance, and then we totally collapsed. We made a new low, and everyone called the bear market. Pulled up into accumulation and dropped, and everyone was like, yep. And now we're talking, we're going to wipe half of the stock market off, and now we're putting in a bull leg. So again, total confusion. There's nothing directional at the moment. You just have to be ready to turn on a dime. But at the moment, we are obviously double topping. So if we can break back down below the 24.72 this week, potentially we're starting a new leg to the downside. Same with the S&P. The Dow is more bearish. We're still obviously in a downward bear channel. We haven't made a new high there. So this is looking way more bearish, like the DAX at the minute. But very difficult to call. Oil, looking for longs. All the time we're green, we're looking for longs. Obviously the initial move was completely undone, and since then we've made new highs. So the market is definitely wanting to push high and put more upside in on oil. There's your previous push up, which we broke through, acted as support. We bounced off of it, so there's definitely buyers sitting down here. Obviously this is where we made that new high there, so this is where we're sitting at the moment looking to find buyers. Nothing at the minute, but again, same as gold. We're looking for long opportunities on this. In times of crisis, we tend to put our money into commodities and tangible objects, gold and oil. Oil is obviously the demand and the supply of oil and gas has changed dramatically. We seem to have found some equilibrium, but the fact that there is so much supply change happening, whether or not that is sold at the same level, the cost of moving it is substantially more. So therefore, you should see an appreciation in gold, in oil over time. And obviously, if suddenly Putin decides to turn the taps back on, and that all changes, we could well see a big spike to the downside on it. But long term, don't see it going anywhere but up. So be looking for long opportunities, and this is a spot on area to start looking for longs if you want to on oil. But as I say, I'm looking more on lower time frames. Again, you're going to get news is just going to destroy anything. If you are long term on anything at the moment, you can just get destroyed and taken out on any news spike at the moment. So This is where you want to be sitting. You want to be sitting on low time frames, and you want to be having a position in the market, waiting for these things to happen. If you get stopped out and you get stopped out and no TP on them, you can make a fortune. And that really is it at the minute. You just got to be in the market at a point when something happens that decides to start that next leg of movement. Just waiting. But longs at the moment. Nice gap fill on oil this morning. So you got lows down there. Obviously yesterday's low. If we get down to yesterday's low, look for the signs of strength. Reversal alert on M5, M15, potentially for long opportunities if we get down there. Morning, Neo. I've just finished the analysis. You're late. Just pulling back up on the DAX. So just testing that wick there for a short. We've rejected these lows again. So if you look at this on a higher time frame, and look, obviously this is a very, very shallow pullback. So, you know, there's every opportunity. This is not it. We're just putting in higher low at the moment. So we break that level, which is why I got the sell stop under that level. We're not confirmed for next leg down yet. We're just literally starting our grind pullback back up into here to try and find some sellers. So we're either going to get a shallow drop and strong trend continuation today, or we're just going to grind back up into there. So difficult to trade. It's so difficult to trade at the moment. You're getting these big spiky movements everywhere all the time. It's tricky. No TPs is what your best bet is at the minute. Get in big old TPs and catch these big moves as they start. Nasdaq is pulled back beautifully at the minute. So very nice rejection starting to show on the NAS at the 2050s here. Dow's made new lows. FTSE's just made new lows. S&P is still struggling along with the DAX to make new lows. So see if we can get that break. Looking for a pop out the bottom. There's going to be a load of liquidity sitting there. Anybody that's long this, Proster, you still in it? Anybody that's long this stops under there. So there's obviously a lot of traders like me sitting with sell stops here as well, looking to take this break. So we should see a nice pop out the bottom of there, and then hopefully another 5 minutes or so continuation to the downside if we get the break. If it breaks that and rejects back up again, I'll probably cover that. Critical time. Good rejection though on the DAX. Pulled back up, tested that wick, tested these lows, and all the sellers stepped back in there. So taking shorts on 1 minute. Cool. I think Proster's got the right idea at the moment. In and out fast on 1 minute charts if you can do it. So nice new low structure there. So looking for a pullback somewhere in there on the Dow. If we're going to continue short, obviously. Anybody got anything else they want to look at? I've covered all the FX pairs really, but so I'm not really trading much FX at the moment. I've taken the odd FX trade. I'm monitoring my other monitor. I have the majors basically, so I'm just watching the majors on 5 minutes just so I can see what strength and weakness we've got on each currency. So occasionally I'm seeing the odd level get rejected and I'm jumping in on them. But I'm not really looking too much into FX at the minute. So it's too difficult to get a directional bias on, really. You just got to go intraday. And this is where your moving averages win. You see on the FX pairs as well, I'm using moving averages at the minute, just the 20 and the 50, just to see if we get any trends starting that you can jump in on, like the pound US dollar there and the euro US dollar. So if I see that sort of movement on euro US dollar, I'm always short euro. I'm jumping in on the odd one of those, scalping as well, in the same way as I am on the indices at the minute. But I'm not really focusing on it much. Profs stopped FX, it's just too. At the minute, it's too dangerous. Well, it's not too dangerous. It's good. It's a good time to be trading. There's a lot of volatility out there, a lot of movement. It's just most traders rely on a directional bias, and that's the difficult thing at the minute. Like I've just shown you, going through the FX pairs, there is an awful lot of wide range bound activity, and we've got a lot of expanding ranges as well, which are very notoriously difficult to trade. An expanding range, because support and resistance goes out the window, and market structure goes out the window. So the two things that most traders rely on, support and resistance, supply and demand zones, and market structure, none of that is applicable in an expanding range. When you see those, we get in these big ranges basically where we jump out the top and we get these false breakouts, and then the false breakouts turn into that sort of thing, and then they'll suddenly go down to the lows, and then they'll make a new low, and then they'll come back up again. So you're getting that type of movement, and then it's like, well, excellent, we're short, and then it just invalidates the market structure. It's just a horrible place to be at the minute. Until Putin pulls his finger out. Or the West. One or the other. This one should go, hopefully, when we break this IRB here. So this candle is in control at the moment. Inside bars, looking for a break of the low or the high. Spread is better on indices, better than FX, yeah. Yeah, if you're trading small time frames, you literally got to trade if you want to trade FX on M5 or below, you want to be trading the majors. But even then, you're not going to get the spreads like you do on indices, which is virtually zero. And no commission. Hey, who doesn't like trading free? Tempting new lows. We've got a new low on the DAX on the last 5-minute candle I'm talking about. There we go. There's the pop. See that little pop out the bottom there? So we just ate all those sell stops, and everybody who was long, we've eaten all their stop losses. So this is a critical point here. We need to push lower and get a nice low, nice break and hold of these lows on this candle. 3 minutes left. From that doesn't look convincing, does it? I think the market's done it today. That was it. Those were the orders we had to execute today. Not interested anymore. bullish on the Dow. Haven't heard the crickets all morning. I've had Financial Juice on all morning. I just realised I haven't heard the crickets go once this morning. No volume. This is not a convincing break of the lows. Give it till the end of this candle, but not particularly enamoured by the speed of drop on this. For this to hold these lows here. There we go. We've got a bit of movement coming through. We've got double bottom just gone in on the Dow, so it's still bulls sitting here. What have we got in the bank so far today? 0.7. Just broken back above the lows. Here come the ticks. Typical. I say I haven't heard it all morning. First thing we get is bull. Brilliant. Closing that at 0.3. Puts me on 1% for the morning. Right. So I'm just got I got two positions running on my other account. I'm just literally putting the stops here above this IRB, which gives me like $250 just in case. I'm going to let it run on the other account, but closing that out there because at 1% on this one. Tricky, eh? Didn't get that break. If we get a break now of this IRB, I think we got a good chance of pushing down. But if you look at where we're going today, there's not really anything here potentially to stop us until we get down to 125 ADR. The fact that we've put in such a big drop today, we're going to start to find the market running out of steam down here. So I think we maybe have one more leg in London, Frankfurt. And then I think we're probably going to have to wait for New York, which will quite possibly want to pull it back. What is the rib? The rib is a bone that covers your heart and your lungs to make sure that you protect your stomach. IRB is an inventory retracement bar. Pullback bar, basically. So basically when you get a push down, people obviously push down, buyers step in, so it retraces. This is selling pressure in this case, yeah. So selling pressure, more selling pressure, which means that there are sellers taking control of the market. It's just at the moment we've got temporary bulls. So when you break these lows, you tend to, as we saw there, you tend to get a pop down and a new leg start. Inventory retracement bar. Pull back. Closing those out. Balls are coming in. I can hear them. So quite fancy along here. Obviously it's counter trend. We've got potential support resistance here. Which is a sticking point. But actually better, really, looking for short opportunities there when the 20 comes down on top, if we can. But this is very, very slow at the minute, this market. So what I'm seeing on the DAX, just enter on a wick. That's on a level. Yeah. Obviously, support and resistance works everywhere. On lower time frames, you get support and resistance between bars. Yeah, I mean, it's just every candle is telling you what the market is doing when you're scalping. Yeah, so if the market is making a new low, yeah, and a lower high, that's market structure. Yeah, so we got a peak formation high, we've got a lower high, a lower low. Lower high, lower low, lower high, lower low, higher low, lower low. Yeah, expanding range. Inside bar, lower high, lower low. Higher high, higher low, expanding range. Inside bar, lower low, lower high, lower low, equal high. Yeah, so it's, you know, the market structure that you see with the market reversal alerts indicator, this is showing you market structure breaks over a period of time. Yeah. So we got higher low, lower low, sorry, lower high, lower low, lower high, lower low, higher high, reversal alert, market structure break, pullback long. Yeah, so this is doing exactly the same thing, but when you're scalping, if you're scalping price action, you're looking at everything on a micro scale. Yeah, so if I got in short here and I saw the market put in a new high, it's bullish. But the fact that it put in a new low is not directional at all, is it? Until the next candle tells you that we've put in a new low, lower low, and a lower high. A lower low and a lower high. So we're bearish. So if you're going to expect it to continue bearish, you put a pending order under that low and you wait for it to break. So literally you can trade candle by candle. And what you're seeing here is the bird's eye view of M1. It's all the same stuff, market structure. Yeah. If we put in a higher low here, i.e. if we close somewhere around here, we're bullish. We've got a low, a high, a higher low, a higher high. If we put in a higher low and a higher high, market structure is bullish. Until we put in a break. But obviously this is just chop at the minute. So, but if you want to trade, you know, you scalp at that level. It's hard though. This is what I mean. The concentration required to do this than to trade on something like a 4-hour chart is just unbelievably intense, which is why everybody gets chopped out and cross, and you know, it's hard, very, very hard trading at this micro level every day, but needs must at the minute. Got a new low on the FTSE which has gone in as well. FTSE's looking really nice from a market structure perspective. Yeah, textbook today. Short. Until, of course, it's not short anymore, and then it's long. And there lies your problem. We don't know that until it's happened. There's your holy grail. Somebody that invents the indicator that can see into the future. That's the one you want. Called a time machine. Apparently. No one's invented it yet, so we haven't actually given it a name, but hey. The no news this morning, either as well. Been monitoring Financial Juice. Literally no news coming this morning. We had something. That's not news, is it really? We know that. It was on the news this morning. I was watching this on the news this morning. So yeah, no news so far this morning. And again, you know, on a micro level, that big move down there, if you want to play a retracement of this candle, do it. Yeah. Jump in short at the 61.850 level. Super type stop. Everything's the same. Yeah, everything works. Markets are fractal. Everything you see working on any time frame works on every other time frame. Or if you wanted to play the swing of this sort of 15 to 30 minute move, again, you're getting in at anywhere between these levels. This is exactly where you want to be shorting. At supply and demand, support, resistance. Definite rejection of those lows. I'm working on my Schrödinger indicator. Never even heard of that. Your Schrödinger's indicator. The market is both long and short until you commit to a direction. Then you're dead. Yeah. The market is both long and short until you commit to it. Then you're dead. That is exactly most traders' experience of the market. Hey, look, it's long. Go long. Oh, it's reversed. Go short. Oh, it's reversed. That's exactly what the market does, which is why I made the indicator. Yeah, and this is why I get so much flack for the indicator. It's like, oh, look, everyone's going long. Stop under there. Oh, it came down and took me out. Yeah, it will do. Market structure's short. Just because you've had a reversal alert doesn't mean you've got to go long. This is coming down. But if it does that, you got a 50-50 shot at best of it going up. So we're still ticking up at the minute. A lot of buyers coming in down here. What is more reliable at this moment, market structure or price action? Price action is king, always. Price action is market structure. Elliott wave is price action. Market structure is price action. Everything is price action. Higher highs, higher lows is made up of price action candlesticks, but in itself it's price action. Everything's price action. Candlestick patterns are the start of your forecast on the next price action leg. Yeah, everybody that trades Elliott Wave, ABCs and ABCDs and E's and all that stuff, it's price action, it's market structure. What's an ABC pattern? Market structure. Yeah, call it what you like. It's the same stuff, all exactly the same stuff. Everything you see out there is like, oh, I'm a wave trader. No, you're not. You're a price action trader. You're a market structure trader. Call yourself a wave trader if you want, but you're trading price action. You're trading market structure. I only trade head and shoulders. I trade market structure, price action. What's a head and shoulders pattern? It's a market structure break followed by a market structure break followed by a peak formation high, which is a price action pattern. Everything is price action. People put price action traders into the bare naked chart pot, basically. So a true price action trader will be trading like this. Yeah, I'm a price action trader. I don't need indicators. I trade price action. And it's quite right. Yeah, it's going to come down to here somewhere in a minute. But it's market structure. A, B, C, D, E. It's Elliott Wave. It's all the same stuff. All the same stuff. And this is why I keep saying you need to go and try everything. Try Elliott Wave. Try market structure. Try candlestick pattern recognition. Try every pattern under the sun. Try trading head and shoulders. Try trading wedges. Try trading symmetrical triangles. Try it all. It's exactly the same thing. It's just different names for the same stuff unfolding, which is the market moving up and down through time. And when you realize that the market moving up and down through time is something you don't have any control over, you forget everything and just trade. That's what you learn after a long time trying to find that holy grail pattern, that holy grail indicator, that holy grail EA, that holy grail system or strategy that works X% of the time. If you just hit the buy and the sell button, you got a 50-50 shot. If you can make it move further, if the market allows you more of that movement than it does that movement to take out your stop, you're a win. That's all you can do. All you can do. I've no idea where this is going. Hopefully it goes down. I haven't got a clue. At the moment, that long wick at the 20 moving average making a lower low is indicative of potentially a new leg forming to put a lower low in there because I've got a lower high here. I haven't got a clue. I have not got a clue. That's the thing. When you understand that and when you let that sink in and when you don't care about hitting the button, that's when you start to make money. And it's an impossible thing to teach, unfortunately. Because until you've experienced it 1,000 times, it doesn't sink in. No matter how much you tell people there isn't an indicator out there that has a 70% strike rate, it just won't sink in. But hopefully, if you stay in here long enough, it'll sink in. And this is why I keep saying, if you want to learn to trade, take a year off every morning at 8 a.m, open up MT4, go into the strategy tester, hit the start button, and let price fly across the screen in front of you and just let that soak into your brain. Eventually your brain will go like I did there. That looks like it's turning. And at that point, you'll go, it doesn't really matter, does it? As long as it goes where I want to 50% of the time and it moves further than it did the last time when I got stopped out, I'm going to make some cash. If I can do that for 0.5% to 1% a day, I'm making 10 to 20% a month, and all of a sudden I'm making money trading. Ping! That's it. There's your light bulb moment everyone's looking for. It's just you can't teach it because everybody wants a strategy and an indicator that's going to make them a fortune. It doesn't happen. Trading with no indicator is a lot better. Yeah. It is better. I mean, the reason I took that short there was because many times in a trend, you will see a pullback to the moving averages. So this is confluence, and this is when I keep saying about confluence. People are like, well, what confluences should I take into account? Doesn't matter. Which one have you seen the most? The RSI getting extended as confluence? Yeah, use that. Moving average bounces as confluence? Yeah, use that. Support and resistance? Yeah, use that. If you get support and resistance in line with price action and a moving average, and the RSI is extended, 1, 2, 3, 4, 5, there's your entry. Take that one. Is it going to work? No idea. Use whatever you like. You know, it's one of the, this is what I keep saying over and over again. Hopefully at some point it sinks in. But, you know, until then, people will hop and go to different strategies. And I'm not being negative at all here. I'm just saying, you know, this is real life. That's what it is. How many times will an opening range breakout hold? How many times will a gap get filled? I don't know. But I see them filling on the day 70% of the time. So that gives me an edge. Whether that edge will go wrong for 5 days on the trot, I couldn't tell you. It did last week. What did I say on Friday last week? I'm not trading these anymore. They don't work. Because I was a bit despondent on Friday. What did I do this morning? Traded that, made 1%. Could have made 1.5, but I chickened out there. You know, it's because I knew that the market was going to open and there was an opportunity that the market might do that and then do that. Here come the bears. I'm really getting into tick strike. I hope you guys don't mind this noise in the background, but I find it really useful. Like, I'm hearing the bears coming into the market. And it gives you so much confidence when you're in a trade that you're right. That's confluence, yeah? Tick strike, ticking negative now is confluence. I've seen that, long wick, at that. I've got in short, and now I can hear the bears coming in. I'm going to hold this because it sounds like it's working. It sounds like we're going to get that leg down. It's weird, isn't it? I never thought I'd use tick strike as confluence, but it works. And like I say, if it works for you, use it. If everybody else thinks it's a pile of crap, that's fine. Let them think it's a pile of crap. If it works for you, use it. If you like the CCI, use it. But don't expect it never to be wrong. As you know, everybody knows that. Our brain, unfortunately, is very restrictive and doesn't like to accept it. That's the problem, is our brain, psychology. And that's the bit that people can't fix, and you can't train psychology. I think that's part of it, isn't it? I mean, you either come to the... you either accept the psychology or you don't. And I think that is what the line in the sand is for people that give up trading. Their brain is just like, I can't find the way to make this work. Their brain will not accept the fact that they can't take control of it. And that's what you got to let go, the control, because you haven't got that control. You no one can control it. Unless you've got 100 lots to enter the market. And if you have got 100 lots to enter the market, at best, you're only ever going to move it 1 or 2 ticks. And then the guy coming in with 300 contracts short is going to really ruin your day. That's what everybody wants. They want a control mechanism to make money out of the market. There isn't one. That's why the 95% fell, because the psychology, your brain is not programmed to say, I can't do it. I'm going to give up. As human beings, we want to progress. God, I'm getting deep this morning, aren't I? That's the other potential scenario that I see playing out now. UK's Foreign Minister Truss will meet Ukraine, Poland's foreign ministers to discuss tougher sanctions against Russia. I'm not sure what else. Does anybody know what other sanctions we can put in place? Is this just more individuals? What else can we do? We've pulled out of everything that we do in Russia, and we've stopped doing everything with them. I'm struggling to see what else you can do really with sanctions, but we've pulled all financial services. We've pulled McDonald's out. I mean, that's the end, isn't it? What else can you do? I guess it's just individuals. There's still individuals which, and I guess their families, I suppose, which they can still put sanctions on to control movement of money. But okay. Stuck in this accumulation at the minute. So we're just making very, very, very slow channel down progress. So on a break of this low, I will probably get out of this position because there's things tend to move in 3 legs. We've had leg 1, we've had leg 2. If we break this low, this will be leg 3. So potentially we could see things start to slow down. We're an hour and a half in. We've had the opening range low put in quite often, and again, statistically, 70% of the time, this could well be the low of the day. So we are stuck at the minute down here, and I don't want to obviously just let this unravel this morning. But Diamond, my theory is that we are affected by confirmation bias when looking at charts. We see things that support our bias about price movement, but don't notice the failures as much. Yeah, and that is why I say in the bootcamp, and obviously I haven't said it for quite a while, but at the end of every week, every trading week, what you should do is open up your P&L, go into your P&L and drag these trades onto your chart. So open up a new chart, yeah, and drag these trades onto your chart. Every week, at the end of the week, you drag them on there and you look at what happened. What happened with my trades this week? Yeah. Did I get out at the right time or did I get out at the wrong time? Yeah. Depends on your view. Did I get out at the right time there? I don't know. Made money. What's your view? Did I get out at the wrong time there or the right time there? Probably the right time. It continued up pushing higher. Yeah. But what you're saying, Diamond, is, this process of doing this, which is what I'd say in the bootcamp to do, helps you look at your trades after they've happened. And you see the market unfolding. So the main purpose and the main reason I say to people to do this is to look at what you were expecting to happen. Yeah, your job as a trader is to put risk on the table and forecast market movement. Guess. Because you don't know which way it's going. No one does, and no one's got any control over it. So your best chance of making money is a guess of 50-50. I guessed it was coming down here, and I guessed it wouldn't go any higher than there when I got into these trades. Was I right? Yes. The only way I know I was right is because I've dragged these onto the chart after it had happened, and I've proved myself right. If you do this every week and you find you're proving yourself right 70% of the time, and yet you didn't let your trades play out, you're getting out too early. If you find you're getting out spot on, like me, before that pullback happened, you're getting out exactly the right time. Yeah. This helps your psychology. And this is also part of that 10,000 hours in front of the charts that you need to put in to build that muscle memory. I'm seeing this happening in hindsight as well. What's happened after? Did I get out at the right spot here? I took a short there, I took a short there, a short there, and a short there. It pushed down, it pulled back up again. Did I get out at the right time? Absolutely. Look at where we came to. I would have gone into drawdown on all three of those. I've been stopped out of that position. I'd have been on drawdown on all three of these positions up there. And we haven't gone anywhere further. Good trade. There's my stops on those two positions. If I look at this at the end of the week and this thing tanked 100 points in the next hour, I'll look at this and go, I was right. It didn't come anywhere near my stops. And it collapsed down to where my TP was. But right now, today, I am 1% up. And the reason I took that off is because I didn't want to go into drawdown. I wanted to protect the 0.7% I had in the bank and put 0.3% on top of it to make 1% for the morning. Done. And again, that's again what I teach over and over again in the bootcamp. Your trading decisions that you make right here and right now are affected by psychology, and that is affected by how good your day is going, how good your week is going, and how good your month is going. Yeah, you will make different decisions every day, every week, based on what's happening in your P&L for these. Yeah, this morning my P&L was up 0.7 when I had to make that decision. If my P&L was down 0.7, would I have made that same decision? Probably not. And again, this goes back to EAs. EAs cannot make that decision there and then. The EA would let that go into drawdown and would still be sitting in drawdown now. It's all psychology. It's all psychology, it's all price action, and it's all complete guesswork. Fun, isn't it? When we trade those patterns and they lose, we get frustrated. Yeah. And frustration leads to overtrading. Frustration leads to over-leveraging. And again, if you accept the fact that you have no control, your frustration levels drop. If I have, I don't know how many times last week we had sessions where I took 3 trades and every single trade was a loser. I then took 3 trades in the afternoon and made 4% or 3%. Or, it doesn't matter what the numbers are. It's process. Market structure works when market structure works. When market structure doesn't work, it doesn't work. Price action worked. It worked beautifully there. Did I take profit? No, because I want more. Should I get out when we get up here? Yes, and I probably will. If this pushes up to here now, I'll probably get out. In fact, I'm going to move my stop, because if that does break above that level, I'm invalid. This trade's wrong. And this market structure is going to take over. I don't know which is going to happen. I have no idea. But the fact of the matter is right now I'm sitting on 1% in profit. So if this goes to -2 or -3, I want to protect what I've gained. Chad, even. I was surprised the war wasn't over after they closed all the McDonald's. Yeah. The trouble is the Russians aren't being told the same as everybody else, are they? They're not seeing on their media. It's the same as in North Korea. They're not seeing what's going on. They're seeing what they are being told to see. The younger generation are getting social media through VPNs and things, and the vast majority are not. They're getting told what they're getting told. Which is why you got mothers groups and things saying, they're bombing children in Russia. They're being shut up. You got groups now saying there's mass genocide going on because they've seen on our Western news that they're pulling out of places, killing population, tying their hands behind the back, shooting them in the head. That's not war. But the vast majority of Russians don't know it. Probably you'll find 80 or 70% of Russians don't eat McDonald's. So when McDonald's pulled out, only 30% of the population was upset. But what were they told? Why were they told McDonald's was closed? It might be that the Russians turned around and said, McDonald's is closing because we're on a health kick. You've no idea, have you? But yeah, they'd be unhappy about that one. Not sure if they got Deliveroo and places like that over there, but bullish engulfing versus bearish engulfing right now on DAX. Yeah. But if you're trading one candlestick, scalpers, true scalpers would be out, right? A true scalper would be out there. Yeah. I'm going short because of that long wick candle. I'm out. I was right. Yeah, there's an IRB there. Yeah, but someone who went bullish on that would have put their stop at the high there. They would have got out there, or there, be out. Yeah, if you get in with 10 contracts short there, you want to be out there. If you get in with 1 contract short there, you probably want to let that run. Okay, there are so many ways to trade the market, which is why I kind of give people stick in the Telegram group when they come in, go gold, long or short. Both. It's going to go up and it's going to go down in the next minute. Long. And then he'll say, oh no, it's collapsed. No, it hasn't. You told me if it was long or short. It went up for 3 minutes after I said long. Did you not get out? Sorry. Oh, sorry, you're trading the daily charts. You know, perspective. Every single tick is price action. Price action is up and down all day long. Flip a coin, hit a button, make some money. It's a good strategy, isn't it? I might set up a website for that. Random number generator. We should develop an EA or an indicator that is based on a random number generator. And every time you press the button, it generates a random number. If it's even, it says to go long. If it's odd, it says to go short. That'd be an awesome indicator. It's going to be right 50% of the time. How cool is that? 50% strike rate indicator. It's the holy grail. It's what everyone's after, isn't it? Sorry, I sound all pedantic this morning, don't I? It's the weekends. I think it's the weekends that do it. I'm always so tired on a Monday morning. It's like my brain is... And especially when the market's doing this. The only opportunity of the day to make money, to make some real money, slipped out with your fingers 10 minutes after the market opened. It's done that since. It's like, ugh, frustration. That's frustration. When we talk about frustration, we get frustrated. That frustrates me more. And it's not the fact that it's doing this. It's the fact that I just want to make money and get out. And it's not giving me the opportunity. That frustrates me, that the market's just not going anywhere. It's the most annoying thing about trading, is sitting there. And again, patience. We do not have patience as a human race. And that's the one thing you need abundance of. With a 50 stop loss and a 50 TP, Proster. Yeah. So random number generator that says go long or short with a... let's not go 50. Let's go 10. 10 tick long, 10 tick stop loss and a 10 tick take profit. Or let's go 12. So we go 12 ticks up. So if it says go long, you go 12 ticks up and 10 ticks short. All we've got to do is be right 50.1% of the time. Or 50.2 there probably. And we make money. Maths. This is what the quants do. The quantitative... their estimates are 80% of the transactions now happening through the funds is quantitative. These quants are sitting there, they're making decisions within fractions of a second to scalp one tick out the market. And it's all maths. That is it. It literally is. It's math, isn't it? What we're looking at on the screen here is a load of candlesticks generated off of quantitative analysis based on supercomputers that, for us, draw candlestick patterns. But 70 to 80% of the transactions happening in this market don't even know what a candlestick pattern is. How freaky is that? I've actually done that as a baseline to compare other EAs to Diamond. What was I talking about then? Random. Everything's random. It's not random. It's chaos theory, basically, isn't it? It's just, especially at the moment, Putin says something, chaos theory kicks in. We don't seem to be going anywhere at the moment. So just a quick overview of what's going on with the indices this morning. We're stuck on the DAX, obviously, as you can see. In a sort of weird flag. The Dow is very much the same as the DAX at the minute. The Nasdaq, however, has returned back to where it started, into this accumulation, this flag long that everyone was waiting for the breakout long on and got the wrong way. So potentially Nasdaq might see some bear action starting to come in now. S&P has retraced 50%, double top rejected in the initial move down, but is flagging. So it's all looking bearish at the moment across all indices, but we've got no movement. So creating an EA that takes random trades and directions, yeah. If you do that, I've never tested it. I've never built an EA to test the theory. And again, testing the theory and back-tested data has got nothing to do with what happens in the future. But in theory, if you just hit the long and the short button with a one-to-one risk-reward, you should find that at the end of that back test, you come out 1 or 2% up or down. Because the laws of averages will mean that there will be fluctuation from the 50%, and it depends when you press the stop button as to whether you will be on the 50% or just above or below it. It's when you start to put the positive risk reward in, i.e. I want to go in with a 50% random long or short, but I want to go 1.2 reward and 1 risk. That's the point in which you need something to influence the direction, because a 50-50 is not going to work with a positive risk reward ratio unless you're lucky. And again, you could have a lucky year, lucky week, lucky day, lucky month, but the laws of average will bring you back to the middle. Mean reversion. And that's the trick, isn't it? Everyone's looking for the indicator that gives them the edge over the laws of probability in that 50-50. But what people fail to understand is that that indicator has in itself a strike rate, which affects the initial reason for the trade being taken, which had a 50-50 chance of working. If you add 3 indicators or 4 indicators into the mix, you're adding a different risk reward to a different risk reward to a different risk reward, or different probability to a different probability to a different probability to the original probability, which is 50-50. And that's why the simplest strategies tend to work, which is, for most people, find a support and resistance level. If it looks like it's coming off of it, take a trade. That's the easiest way to do it. But that's not good enough. There must be a better way, and I will keep hunting for it until I find it. Sound familiar? It's out there. I watched Moonfall at the weekend. Has anybody seen that? Wow. Who'd have thought it? I won't ruin it in case. I was just going to say, obviously, what the major plot twist is, but I won't say it just in case people haven't watched it. But yeah. Just go and get a drill and check that out. Just pushing up. Just going to see if we break these highs. In which case, if we do, I'm out. Because this thing's just not going anywhere at the moment, and I can't be bothered to sit here and wait for 300 pips of movement. It's too slow today. Stopped out 0.2. Brings you down to 0.8 for the morning. So there's still, we just made a new high, basically. So market structure shift is now potentially long. Obviously, by the time you identify that, you've missed the movement. So wait for pullback and play it back up into this zone, I guess, this morning. We're triple topped on the S&P at the minute. Still got 2 minutes left on this candle though, so obviously this can all change. But so I like this area for shorts still. We've put in a new low today. So if you look at it on the daily, on the DAX, so we've put in a new low. We've also put in a new high. So no idea. But we did come off of the lows of the previous day. So at the moment, this candle here is where we are focused on the highs and the lows of this candle. Until that is broken, we're basically just inside bar range bound this week. So that high there is a very important high, which is 147.38 roughly. And obviously the low that we've just come off. So potentially we could go red to green today and start pushing back up towards those highs. But equally, obviously, we could just be in the pullback next leg to coming down and break those lows. Again, still coming for that area. So personally, I'm still more short than long on it. But this is where we want to start looking for shorts up here somewhere. So looking for bearish price action, or literally if this continues to push up there and the candlesticks start to get smaller, just pending orders underneath the lows. So just sell stop under the last candle. Next one, sell stop under the last candle, and just keep putting those sell stops in until, if it's going to happen, we get that drop and that break to the downside. That's really all we can do this morning. We've had the movement and we've sat through the sideways, which was entertaining. So yeah, I might go and do. Should we develop that EA? The 50-50 random EA. So get a random number generator. If it's positive, if it's an even number, we'll go long. If it's an odd number, we'll go short. We'll see if we can make that work. Very easy EA to develop. But we'll give it a snazzy name like Black Widow. And we'll put it on the marketplace for $500. Everyone will buy it. So I'm very pedantic. So a lot of these, I get these emails every now and again, as I'm sure everybody does. The best-selling indicators and best-selling EAs on the marketplace, which are all completely picked at random, by the way. I should know because I have one of the best-selling indicators on the marketplace, and it doesn't appear in those lists. And you get these ones coming through every now and again, and it's just, you look at the it was launched. There's one this weekend I got, and it was launched on the 19th of March, and he's got 300 positive reviews. It's launched on the 19th of March. Really? It's 2 weeks ago. How'd you get 300 people that are giving it 5-star reviews? Something's not right there, is it? And it's basically every time somebody buys something, to be able to get the bonus, you have to leave a positive review, and then he sends you something for free, which is usually a free indicator or something like that. But what he ends up doing is building up massive reviews which are positive. And then this particular person, who was Russian, was every time there was a negative review left by someone that actually tested the indicator before they purchased it and found out how crap it was, the EA, he abused them and swore at them in the reviews. It was like, Jesus. But anyway, I have very mixed reviews, as you can probably gather, about the marketplace on MQL5. Nasdaq is just coming up to highs. So, good opportunity for potentially shorts up here with the Nasdaq. So, looking for price action off these highs. potentially putting a double top in. Worst case scenario, we might get a couple of candles pullback if you want to scalp it super small time frames, or wait for this candle to close. And if this is going to be a reaction point, nice risk reward at that resistance. Again, your odds on that holding are approximately 50%. S&P is also reaching up for potential resistance. Well, yeah, just holding that support, holding that market structure break. So this is a retest of the breaking structure that we've just got. Nice big strong push there. We just had some news. No. Russian forces have left the Chernihiv city. That's the other thing that worries me about this pullback that the Russians are doing at the moment. It's quite possible, and a fairly sound tactic, that you pull your troops back before you unleash hell, which is slightly worrying. There's an awful lot of troops being pulled back at the moment, and you want to protect your forces if you're going to send in any type of chemical or tactical nuclear weapons. Obviously you don't want to kill your own troops because you're going to need them. So if you're not able to take an area by force, the logical thing to do is to remove that area if it's not strategic. So we could have some worrying news starting to come in over the next week about use of the other weapons, which obviously a lot of the military experts are predicting is on the cards as well. So smash straight through that. Again, that's why you wait for candle close. So not held. A lot of breakouts fail. So if we get a nice big bearish engulfing going in here now, potentially that's a nice short opportunity. Obviously, bear in mind there's not a lot of activity going on in these markets at the moment. We're in the Globex session on the US markets. So, right, I'm going to leave it there today, guys. So I'm up 0.8 on the morning. So not bad, considering I missed this move. But gap fill made up a large portion of that this morning, but very tricky this morning. Not really gone anywhere. So at the moment, we're just in a pullback. So this is potentially the second leg. If you look at this on a higher time frame, it'll make a lot more sense. This doesn't make a lot of sense actually on a higher time frame, to be honest, at the moment. But this is a pullback potentially on a next leg down. This is what I mean about this this market being very difficult to trade at the moment. The normal movement that we see going on at the moment isn't happening as much. What we're seeing is absolute dump, nothing, absolute retracement. By the time you've identified this, you haven't been able to get on it. And like with the yen's just gone like that. Everything against the yen's gone like that. There was no opportunity to get in on that movement, and yet you can't chase it if it's screaming away at that sort of speed. Because where do you put your stop loss? There's no logical areas to put it, and this is what we're seeing a lot at the minute, is this kind of massive movement, which is just unbelievably difficult to get onto and extract some money out of. So you kind of have to do the catching falling knife thing at the moment and assume that your prediction is going to be market structure down, get in here, pick a stop, and hope that we get that movement happening. Still got 3 minutes on this candle, but looking like it's starting to kick in with sellers here. But why? There's nowhere there, obviously, that you would expect sellers to step in, is there? But it's kind of all you can really do at the minute with this sort of aggressive price action that we're seeing coming in. If you're an hourly trader at the moment, you're trading the hourly charts. By the time you've seen this 3-bar reversal going in today, and you're looking to take a long on it, your stop's massive. Very tricky. Right, I'll be back on it this afternoon at 1:50. No, I won't. Sorry, 2:20. As usual. We'll have a look at what's going on with the rest of this morning. This morning, I'm still looking for shorts on the DAX. So this is kind of where I'm interested at the minute. So the opening range low, where we initially started this bear move today, if we can pull back up to here, that's kind of where I'd be looking to start to get short. Obviously, with this strength of this move, there is a potential, obviously, for bullish price action to come through as well. Probably not going to get too aggressive looking for a drop and a break of the lows until we've got some confirmation. But equally, the move could be just as fast. We've had 10 minutes solid up there. We could have 10 minutes solid down or 15 minutes solid down that take us way below those lows immediately. So looking for opportunities to get in short on DAX at the moment still. Just literally on the basis that I'm still looking short and I'm still looking for the gap fill. And the fact that we've broken back within this range now. So looking for that today. We've got the reversal out on the 4-hour. We're retesting at the moment. I'm looking for a low retest somewhere about where we got to with a gap. So that's my plan for this morning, is just try and get in some shorts and try and eke a little bit more out of this. And then we'll have a look at the markets for this afternoon. But as I said, we've got no news. 10:05, Bailey is talking. I wonder if Bailey said something that's caused that. Let's have a quick look at the pound. Nothing dramatic. As you can see, there's not a lot really happening anywhere at the moment. Nice W. There's a nice horse. Camel. Whatever you want to call it. That's my stupid chart pattern I made up. So yeah. Obviously that looks like it's still coming down. But nice W pattern there as a reversal for longs on the US dollar. Longs on the US dollar typically mean shorts on the indices. But obviously this is the Frankfurt session, so it's a little bit different. But yeah, no real movement on anything particularly this morning. So bit of a dull session after that initial dump. So that's the plan for this morning. Again, no news until 3:30 this afternoon, which is the Bank of Canada Business Outlook Survey, which doesn't really do anything. So it's a no news day. So we're just waiting for the market to just move wherever it fancies. So they're just going to manipulate it up and down as they wish. And then tomorrow morning, we've also got the Australian dollar. So we'll be looking just basically for short opportunities on the DAX until this afternoon. And then we'll see what happens with the US markets. Oil's coming down again. So again, all reversing. Similar sort of thing. We got the gap fill. We shot off, did nothing, and now we're completely undoing the move. So potentially we may be longing, but I'll see where we go here. We've got a nice pause candle there. We are just starting to roll over. But obviously there is potential for us to get back up here, I think, this morning at least. So be watching that area, but I might try and play a little short from here. If this price action just kind of stalls out, I might try and play some breaks of the lows, but we'll see. I'm not sure on direction at the minute. So anything else you need, let me know. I'll be in the Telegram group. And back at 2:20 this afternoon. Okay, so have a good morning. Hopefully it's profitable. And I will see you this afternoon before New York. Have a good one.